Hi, this is Raghee Horner, Chief Currency Analyst at IBFX. And what we're going to do here today is take a look at two pairs. And these are two pairs that I have been actively watching and trading. And the one thing they have in common is the Australian dollar. So we're going to take a look at the Aussie loonie here and also the Aussie US. I'm going to talk about the differences between these two pairs and which has frankly been my favorite in this environment. So first of all, when you're talking about the Aussie, right now we're talking about probably one of the strongest single currencies out there. The Aussie obviously is a calm doll. The Aussie has a link back to risk in that when risk is on, think about the Dow being stronger and the US dollar being weaker, being a risk on. Think of that as being the reflection of being risk on. So when you have that, you're going to see the Aussie gain. But even when we've seen risk off the table, we've seen a lot of Aussie strength. And one of my favorite markets to take advantage of the Aussie strength consistently has been the Aussie loonie. And you can see here this uptrend, which is reflected in the 12 to 2 o'clock angle of the 34 EMA wave, as well as the consistent green grab candles here. They have all the signs of the uptrend that I'd be watching for. So the green grab candles indicate bullish sentiment and momentum, while the 12 to 2 o'clock angle reflects the uptrend itself. So this chart, as well as the daily of the Aussie US, both are in what I call bullish directional bias. In fact, we even have a channel up pattern on the daily Aussie US, which ideally should occur in an uptrend, which we have with the 12 to 2 o'clock angle, dominated by the green grab candles. So we have on both the Aussie US and the Aussie loonie a bullish directional bias. There are some distinct differences between these two pairs, though. One, and that has to do with the clarity criteria. Let's talk about that right here. So if I'm talking about the clarity criteria, I'm talking about, here we go, I'm talking about three elements of the tools that I use, the 34 EMA wave and the grab candle. Those three elements are the smoothness of the wave itself, the moving averages of the wave. The other criteria is how established is the wave. In other words, how long has it been traveling up at that angle? And then finally, how respected is that wave? And respect applies to specifically trends. So how respected is it? So in terms of smoothness, right away I can see that we have enough lump and bump. You can see the little transitions here. Enough lumpy and bumpy movement in this wave where I wouldn't, say there's no smoothness in the market, but the actual ranking for that, how I would gauge it, is probably medium to maybe even slightly low. Is it established? Well, we've been heading up with green grab candles since mid-June, and here we are on the doorstep of August. Is it respected? Well, we can definitely see the respect when we step in and take a look at these pullbacks and how the wave was acting as dynamic support within the context of the move higher. So we definitely have a respect for the wave as well. So established and respect rank well. Smoothness doesn't rank as well, but we can see we have an uptrend. Now, let's contrast that with the same criteria on the Aussie loonie. Notice that we have an uptrend. Notice that this uptrend is slightly more smooth. You can see here we've had slight transitions, but the angle has been much smoother and moving smoothly at 12 to 2. So on the smoothness criteria, it's doing great. On the established criteria, well, this trend has been moving up higher with green grab candles since the 5th of June. Okay, so about 10 days or so longer than the Aussie US. So the Australian dollar has been gaining on the Canadian dollar a little bit more consistently, and it's been gaining a little earlier. Started this uptrend a little earlier. If finally is respect. And is there respect on pullbacks? Sometimes the pullbacks haven't even gotten to the wave, so it's not even a matter of the wave not being respected. It didn't pull back enough. And notice that we have respect as well. So smoothness, it ranks high. Established, it ranks high. And respect, it ranks well. So putting all those together, the Aussie Loonie is a little bit better a choice. Because when we have, in this case, Australian dollar strength, we're likely to have some Canadian dollar strength too, but we can see quite easily the Australian dollar, even in a risk-on environment when we have had one, I think stronger Dow, stronger commodities, weaker dollar, the Australian dollar has had no problem outpacing the loonie in the uptrend. And when we have risk off, those have created these Aussie loonie pullbacks. So the Aussie weakens, but only to the point where it creates a buying opportunity, potentially within the wave or even at the 20-period simple. So risk off, weaker Dow, weaker commodities have offered buying opportunities, and risk on has maintained this uptrend on the Australian dollar, Canadian dollar pair. So if I'm going to try to take advantage of Australian dollar strength, I'd rather do it on the Aussie loonie. Now, some of you might say, well, what about something like the Aussie yen? Well, we have to start with that daily time frame. And when you do, you'll notice that this particular market is not moving in a trend. We actually have more of a sideways angle, even though we're slightly moving higher, more of a sideways angle. The slight strength is reflected in the green grab candles you can see throughout the movement, but overall, I can't step back and say that this particular pair on the daily is moving to higher highs and higher lows consistently enough to take this 34 EMA wave and pull it up to a 12 to 2 o'clock angle. It is moving higher, but notice how much lump and bump and how we're moving more kind of 2 to 4 o'clock than 12 to 2. This actually sets it up for what we would call a distribution fade with expectation of weakness coming into areas of prior resistance. And because of that, this isn't a trend following scenario. In fact, I would put in a stochastics indicator and look for when we are actually reaching that overbought area, and then look for the market to be coinciding with the overbought at a ceiling. And that would be a distribution fade, taking advantage of a choppy sideways market, traveling to its range highs, selling into that, or a choppy sideways market traveling into its range lows, and buying into that. Okay, so this is not a pair that has a lot of clarity. When I don't have the consistency of green or red grab candles, when I don't have the 12 to 2 o'clock or 4 to 6 o'clock angles that would accompany an up or down trend respectively, I don't have clarity in the market. We don't have smoothness here, right? So when we don't have clarity on the daily, there is no overall dominant bias. And I'll typically paint the background of those charts blue just to remind myself that we're dealing with a market where neither the bulls nor the bears are really ruling the overall psychology. And therefore, let me tell you something, when we have an environment where we don't have a dominant overall psychology, the expectation then can be, for one, more volatility, and actually lower reliance on who can move the market on any given day. There also then is less chance that we'll see one group, the bulls or the bears, be able to consistently dominate the market and push it to higher highs or higher lows. Therefore, I have less confidence that support will be bought into or that resistance will be sold into unless we reach the extremes of the trading range on the daily. Intraday it becomes a much more murky picture. So that's contrasting mainly the Aussie loonie, the Aussie US dollar, both of which are in uptrends, but I showed you how I differentiate between the two and therefore how I choose which pair I'll put more focus on, and then how I might rule out a certain pair. And the one thing all these pairs have in common is, of course, the Australian dollar. I'm using that Aussie to kind of be the main currency, the single currency I'm focusing on, because I know it has been strong, but now I'm asking myself, which has it been most organized and strong against in terms of that second currency in the pair? Is it the yen? Not really. Is it the U.S. dollar? Certainly more often than not, but I think the best has been its consistent strength over the Canadian dollar. Hence, I'll focus on the Aussie loonie. All right, that's the video for today with some trading ideas for this week, as well as some overall trading ideas when it comes to pair selection and which direction you will consider taking the trade in.